Well, thank you very much for having me. Unfortunately, I don't have a video half as good as the one that we just saw there. In fact, I don't have any video at all, but that was wonderful and a pretty tough act to follow. But good afternoon. It's a privilege to be here, and I look forward to talking you through a little bit about the way that we think about climate change as a company and the role that energy has to play within that. I'm afraid that the talk won't be particularly technical. Apologies to those who are expecting a technical talk. I can guarantee there won't be any talk of battery chemistry or anything like that, but hopefully the change of pace is something welcome at this time of the day. Do I have a pointer? Or? Oh, that's it there. Okay. Didn't look like a pointer. No. The green one? Okay, there we go. Okay, good. There we go. But first, let me introduce you to our company. BHP is a global resources company, one of the world's top producers of major commodities, including iron ore, metallurgical coal, copper, and uranium. We also have substantial interests in oil and gas. Our operations and interests are spread across the globe, as the picture indicates. BHP was founded 130 years ago in a town called Broken Hill in outback New South Wales. From those beginnings, we've grown to become the world's largest diversified mining company. Our strategy is fairly simple. We want to own and operate large, long-life, low-cost, expandable upstream assets diversified by commodity, geography and market. And while today our portfolio is relatively simple, the scale of our operations is our strength. Under our operating model, our Minerals Australia group includes operated assets here in Western Australia, Queensland and New South Wales, and South Australia, focusing on copper, iron ore, coal and nickel. Our Minerals Americas group includes projects, operated and non-operated assets in Canada, Chile, Peru, United States, Colombia and Brazil. These focus on copper, zinc, iron ore, coal and potash. Our petroleum unit comprises conventional and unconventional oil and gas operations and includes exploration, development and production and marketing activities in the United States, Australia and Trinidad and Tobago. Our products are sold worldwide by our marketing teams led through Singapore and our Houston offices. There we go. We're proud of the role that we play in supporting and enabling global growth and development. The resources we provide are essential to almost every facet of modern life, from transport to energy production, infrastructure to the components of the mobile phone sitting in front of you at the moment. And no matter where we work in the world, our commitment to our charter values, as shown here, underpin everything that we do. It's probably our most important document as a company. Our charter describes our purpose and values and how we measure our success, including when it comes to the diversity and inclusiveness of our teams. It describes our commitment to sustainability and enshrines our firm belief that safety must come first in everything that we do. We believe that our people are our most important assets, and to succeed, we need a workforce that reflects our values and the communities in which we operate. We aim to recruit from our host communities to attract high calibre people who are committed to the success of our organisation. In return, we're committed to developing the skills and the capability of those employees. Okay, our size and scope allows us to make meaningful contributions to the communities in which we work through the taxes and royalties we pay, wages, supplier payments, and through our voluntary contributions, which are significant. We aim to maximise the social and economic benefits of our operations, contribute to economic development, and minimise our own environmental footprint through innovation, productivity, and technology. So our approach, that commitment to minimising our environmental footprint is at the core of our commitment to action on climate change. Climate change poses a risk to the environment and the social and economic development of our company. At BHP, climate change is therefore a critical board-level issue. We have a clear and consistent position on climate change. We accept the IPCC's assessment of climate change science, and I look forward in the future, as a company spokesperson, not to have to say that, because it should be something that's accepted by all large companies operating in the world. We believe that the world must pursue the twin objectives to limit climate change, as well as providing access to reliable and affordable energy. We don't prioritise one over the other. Our integrated climate change strategy focuses on 5 areas: mitigation, or reducing our emissions; adapting to the physical impacts of climate change; accelerating the development and deployment of low emissions technologies; testing and building the resilience of our portfolio; and working with other stakeholders to enhance the global response. Each of these areas is essential to managing the risks that climate change poses. I'll now describe each of those in a bit more detail. In terms of mitigation, reducing our operational emissions has been a focus for many years. For example, we've set targets in this space since the 1990s. We now have a challenging long-term target, or CAP, to keep our operational emissions below our 2006 baseline, despite the growth in the company. With FY16 emissions at 18 million tonnes and FY17 emissions being at a similar number, we remain on track to achieve our target. But to do this, we require all of our businesses, wherever they operate, to identify, evaluate and implement emissions reduction projects. Since 2013, we've implemented projects that have delivered almost 1 million tonnes of annualised abatement. For example, in 2016, we implemented a program to improve power generator efficiency at our onshore shale drill rigs in the US. This reduced emissions by 18,000 tonnes, as well as reducing maintenance costs and fuel consumption. And our mitigation efforts are being recognised. For example, in October, we received an award from the CDP, many of you will be familiar with that group, for the largest absolute emissions reduction of any Australian company. Probably something that we don't mention as much as we could in regard to mitigation is the work we do in REDD+. REDD+ is it focuses on reducing deforestation and forest degradation. Our REDD+ strategy targets 3 areas: governance, project support and market stimulation. Last year, we announced an investment in the Alto project in Peru, which protects around 180,000 hectares of threatened forest, supports community livelihoods and has the potential to deliver 800,000 tonnes of carbon credits. And we recently announced our investment in the world's first forests bond, developed in collaboration with the International Finance Corporation. We believe this could stimulate the global market by enabling investors to receive their investment returns in the form of carbon credits rather than cash. Adaptation, that's the second area that I've mentioned. Given the physical impacts of climate change are unavoidable, we require all assets to consider climate change impacts in their long-term planning. And we are already taking action to build the resilience against those impacts. For example, at our coal business in Queensland, we've identified sacrificial pits to cope with extreme rainfall, and we've raised the height of our Hay Point terminal to withstand increasing storm surges and sea level rises. We also know that our assets don't operate in a vacuum, and that climate change will impact our host communities and the supporting ecosystems around that. And so we support community resilience projects such as our Adaptation planning project in collaboration with the civil society groups in Trinidad and Tobago. And we've partnered with the Great Barrier Reef, something we're very proud of, the Great Barrier Reef Foundation, to develop a reef resilience framework which can be applied globally. Okay, now turning to the third area of our strategy, one that's particularly interesting to myself and maybe to yourselves, low emissions technology. Given increasing global energy demand, it's vital that technologies are developed to provide alternative sources of energy and reduce emissions from the production and use of fossil fuels. We're working in partnership with others to identify and overcome the barriers to deployment of technologies that have the potential to materially reduce global emissions, not just ours. This includes technologies to reduce emissions from power generation, transportation, and industrial processes from our own operational activities as well as those external to our boundaries. Now, we recently announced a partnership with Peking University in Beijing to identify how carbon capture and storage could be used to reduce emissions from steel making and other industrial processes. This project looks at how to overcome the technical, economic and policy barriers to emissions in the industrial sector, which currently represent about 25% of global emissions. And as other sectors decarbonise, that sector is likely to become overrepresented from a percentage view within that sector. So we think this is really, really important work. We're also looking at technologies that can provide alternative sources of energy. Batteries hold great potential to support the growth of renewables. We're working in partnership with the Lakeland Solar and Storage Project in Queensland, which is testing large-scale battery storage at a fringe of grid location. We're cognizant of the rapid change in the cost of renewable energy technologies, including batteries, and increasingly recognise the importance of supply-side opportunities to reduce our emissions. I'll turn now to the fourth area of our strategy, portfolio evaluation. We've been testing the resilience of our portfolio to climate change for many, many years. We've had an internal carbon price in place since the early 2000s, and climate change is built into our scenario analysis and also our investment decision making. Our planning starts with a central case, which we build through analysis of commodity markets, the global economy, and then benchmark against external views. This is our forecast of what we expect to happen. It's our most likely outcome. But we recognise that the future is subject to uncertainty and the world could move in several different directions. So we use scenario analysis to understand how external factors like technological, economic and policy trends might affect our business. These scenarios aren't forecasts, but are designed to be plausible, divergent and internally consistent views of the world. So we have 4 scenarios, as you can see there, which summarise the different ways the world could evolve from the central case. For each scenario, we develop a range of signposts and triggers to help indicate which scenario is becoming more dominant. It's important to know that climate change occurs in all of these scenarios, otherwise they wouldn't be plausible. What differs between them is how the world addresses climate change. There we go, third time lucky. I'll describe one of our scenarios, the Global Accord, in a bit more detail. This models a reduction in emissions to get the world on a 2-degree pathway. In Global Accord, we see robust economic growth and unified action to address climate change. Breakthroughs in low emissions and renewable technologies, along with stronger consumer pull for green products and services, enable an orderly transition to a 2-degree world. We also stress test our portfolio against a shock event, a much more rapid version of the Global Accord, with a 2-degree path reached by 2030, driven by stronger government regulation and significant step change technology development. Once we've created those scenarios, there we go, we then run a very detailed modelling exercise on each of our commodities in our portfolio to give us a view on the potential impacts of that long-term demand. This slide shows the impacts on demand for our commodities in a 2-degree world. I want to make sure that the messages coming through this slide are communicated well. The 100% line indicates the long-term demand in 2030 for each commodity in the central case. That's what we expect to happen. The blue dot indicates demand in 2014 for each commodity, and so there's increasing demand in those commodities. And yet the orange box indicates the range in demand for each commodity in the orderly Global Accord scenario, as well as the rapid shock event. As you can see, in the Global Accord scenario and shock event, we see demand continuing to grow for most commodities, but relative to the central case, there are winners and there are losers. Oil and coal are most impacted, as you can see. Copper, uranium and gas do quite well, along with higher quality resources in iron ore and metallurgical coal used for steelmaking. We also considered the impact of profitability, or EBITDA, in the Global Accord and the shock event, again relative to that central case. This shows a relatively small impact for a long-range view, demonstrating that our portfolio is resilient even in that shock event. So why is this? It's driven by our strategy of diversification, low-cost, high-quality assets, and the projects with rapid payback periods. The commodities in our portfolio, including oil, natural gas and thermal coal, have strong future margins given the high quality of those assets. And with our commodity diversification and growth options, we can minimise the risk of those assets. We continue to regularly consider the attractiveness and potential addition of new commodities, and we have the flexibility to test and adjust our portfolio, including selling of assets. So we'll continue to adapt and evolve to strengthen the portfolio and deliver that long-term shareholder value that's expected. Although we've been using scenario analysis for several years, we recognise a growing interest, particularly from the investor community. So in October 2015, we released our portfolio analysis, which described our approach and explored potential implications of both an orderly and a more rapid transition to a 2-degree world. It was a groundbreaking report at the time, providing insights into how the board and management think about climate risk and disclosing details of potential impacts on demand and also profitability for the company. It was quite well received by investors, often being cited as best practice. We've been very pleased with the response that it's generated. Better disclosure for us makes for better discussion with investors and others, which leads to a more informed decision-making on the part of those investors. And we encourage other companies to do the same. Things don't stay the same. So following the release of the portfolio analysis in 2015, investors asked us for more detail on how we monitor the external environment for changes that might occur. So in October last year, we released our Views After Paris document, after obviously the Paris Agreement came to a conclusion. It describes how climate change is integrated into our strategic planning processes, some of the key signals that we've seen over the last 12 to 18 months, such as a strong outcome at COP21, the accelerating deployment of electric vehicles, and the uptake of renewables. The impacts of these signals on our portfolio and strategy is well documented, and I encourage you to have a look at that document. The signals we observed are supportive of our global accord scenario. Given that most of these signals are indicative of longer-term trends, we see minimal impact to the financial return on the portfolio. Turning to the fifth area of our strategy, this is around stakeholder engagement. Industry has a key contribution to make to climate change policy by working with governments to inform the development of effective long-term policy frameworks that deliver a measured transition to a low-emissions economy. We welcome the Paris Agreement targeted forged at COP21 and see this as a strong foundation for further action. Although we plan for a range of outcomes, we will continue to advocate for the international commitment to keep the increase in global average temperatures to well below 2 degrees. Each country will determine its own policy framework based on where its emissions come from, the cost of abatement and other strategic priorities. But we believe that a price on carbon, complemented by measures to improve energy efficiency, accelerate the deployment of low emissions technology and build resilience to the impacts of climate change, are all part of that effective policy framework. So in conclusion, addressing climate change is and will remain a priority topic for the BHP Billiton Board, or the BHP Board. Our position on climate change is clear and we're committed to taking action. We have an integrated strategy that addresses mitigation, adaptation, technology, portfolio evaluation and stakeholder engagement. As well as identification, assessment and management, disclosure is key to ensuring more informed decision making. I hope today I've been able to give you an insight into how we think about climate risk and how we're addressing that. Thanks for your time. I know we don't have time for questions, Adrian, but I'm happy to take questions in the break. Thank you.